morning. I'm David Carruthers. I cover quantitative research at dataexplorers. I'm going to talk to you today about what's been happening in the markets overnight and today, and about a couple of interesting situations in our securities lending data. Start out by talking about what's been happening in the money markets. So the huge cash injections that we've seen have had some beneficial effect. We've seen LIBOR rates coming down around the world, in Europe in particular, but also in the US. We've also seen General Electric and Citigroup tapping the Fed's commercial paper credit facility, which is good news that they feel able to do that because it's simply debt that they're rolling over, which at the moment the money market doesn't quite have the appetite for. It's very early days to see how the money markets are going to respond in terms of longer maturities. What's happening so far is that LIBOR is coming down at the very short maturities, but we would hope that that thaw is going to continue and it will eventually spread beyond the Christmas maturities. Having said that, the equity markets are a bit more green about the gills again today. So having had an initial burst of euphoria on Monday, equity markets are coming off again. But the markets have been reasonably discriminating. So for example, in the UK, bank stocks were hit rather heavily yesterday, and that was concerns about the fact that dividends were going to be suspended. The banks have now gone back to the government and asked whether it might be possible to renegotiate the deal in order for the banks to remain as important components in income funds. And it looks as if today there's an expectation that that will go through because the bank stocks are looking a bit perky. The DESLI index that we launched very recently is looking quite interesting. This is the global index, and you can see that the volume of lendables continue to drop. It's now down about 13% overall since the beginning of September. But the volume on loan, the shorting volume around the world, is high and has remained high and is now stabilising. So there's certainly plenty of appetite amongst people to be taking out short positions. A specific situation that's quite interesting, especially in view of the shorting bans, is Asia. So you can see that there was a very big increase around the time of the ban. People couldn't short anything else, so they shorted Asian stocks, and that's nearly all been unwound and it's pretty much back to where it started. Now, a couple of stocks that I would highlight using our data. One of them is InBev, who've pulled their rights issue to cover the Anheuser-Busch takeover, and you can see that on our data there's been a huge increase in the short position, both on market cap and loan and utilisation over the past month and a half. And that seems to have been certain individuals in the market quite correctly anticipating that this deal was going to have a problem going through. And you can see that the share price has fallen over the past month and a half. Another stock which is of interest is AutoNation. And that's a car dealership in the States. You can see that there's been an enormous increase in the short position over the past few months. And again, quite correctly, some people in the market have anticipated that there was going to be a big decline in auto demand. And you can see that the share price really has come off very, very sharply in the past month or so. So those are the things that we would highlight today. I wish you all the best of luck and a good day. Thank you.